Hi everyone, I'm Sophie Milburn, editor of the MSP Channel Insights portfolio, and today I'm joined by Daniel Welling from the MSP Finance Team. So to begin, could you introduce yourself, your role at the company, and just a little bit about what you do with your work with MSPs?
Thanks, Sophie, and thanks for having me on the program. Yes, Daniel Welling, co-founder of the MSP Finance Team. Our mission, along with my business partner Adam Morris, is to raise the financial maturity of the MSP marketplace. Both Adam and I are former MSP owners ourselves, and in our work, post our exits, working with other MSPs, we really found there was a big gap around financial maturity, and so our mission was to set about resolving that, and we do that through direct mentoring by Adam and I with our clients, along with bookkeeping, management accounts, and compliance accounting, ultimately helping MSPs get familiar with and ultimately know their numbers.
Fantastic. It's definitely a very different interview for me today, so that's always fun. And a lot of the topics that we'll be covering today, you'll be also speaking about at the MSP Finance Team events that you've got going on in July and October. So for anyone that's kind of not familiar with those events or haven't heard of those before, what do those kind of entail, and tell us a little bit about them.
Sure. Well, one of the key things about the MSP market that Adam and I are so passionate about is the meeting and sharing of minds within the MSP market. So 4 years ago, we set about to create our own community based around my interest in motorsports, and so we've held an MSP meetup event at Brands Hatch ahead of the British Touring Car final race weekend. We get MSPs together. We put on educational content, and we have a little bit of fun looking around racing cars as well at the same time. So we're repeating that same format again this year in October. And we've introduced a new event this year, which is at Reading at the Team Sport karting venue. So exactly the same format, educational content around helping MSP owners become more financially mature. And then we go karting in the afternoon. And the British Touring Car driver that we sponsor, Tom Ingram, will be out on track racing with all of us MSPs out on track as well. So a real unique experience, and hopefully bit of fun and a little bit of learning.
Yeah, work hard and play hard. It all sounds really, really good. So if we kind of get into maybe the main questions then, why do like so many MSPs, I guess, struggle with, true profitability, particularly when it comes to, financial visibility, reporting and operational data? What would you kind of do to cope with those misunderstandings there?
Yeah, I mean, I think it's probably baked into the reality that most MSP owners are technicians in origin, and by technician I mean a dentist is a technician, an accountant is a technician in their own trade and profession, and MSP owners are typically IT engineers in origin. They've not necessarily had a business or financial education, and often it is the case that they're just not that particularly interested, and ultimately who is. Yeah. And so it's about bringing the topic to life, appreciating it for what it is, the insights it can give you, but also the fact that although automation is of course used in so many disciplines today, these the numbers don't produce themselves. They're not sufficiently accurate unless they're checked, and so very often MSPs can be looking at a report in Xero or QuickBooks, and it all looks healthy, but actually there's not enough information and manipulation in there to give them the true underlying picture. And and I think that's ultimately where a lot of MSPs find themselves, perhaps managing their business mostly based on how much money they've got in their bank account rather than what profit they're actually making.
Yeah, I guess I hadn't thought of it like that in terms of coming from a technician background, not a financial background. So, yeah, like you said, it's that education piece. But what kind of role do you think that, financial tooling systems, such as, PSA, CRM, and accounting integration sort of play in creating or hiding those visibility gaps, do you think?
Yeah, great question, and I think it's probably a double-edged sword.
Mm,
The false security of thinking that, well, the PSA is integrated to Zero,
mm,
so surely everything from the PSA will just end up in Zero in the right place.
mhm,
Not necessarily, and also, although we'd like to have a single source of truth in terms of a profit and loss, a balance sheet, client level profitability often isn't visible within the accounting platform. So you have to look at the PSA for that. And if the if the data isn't right and accurate, then it won't give the the true answer. And
yeah,
one of the other perennial issues of the MSP business model is having engineers, well, anyone in the business that is delivering a service, log their time accurately and efficiently in the PSA. Because if they're not logging their time correctly, then you won't be able to see what the true consumption is against the contract, and therefore whether a contract is profitable or not profitable. And
yeah,
very often the case, the assumption is we've got a client over here that pays us £10,000 a month, so they, that's a good customer. But if they're consuming £15,000 worth of resource, then you're losing
yeah,
£5,000 a month. so
yeah,
so it's really important to be ensuring that the information is being curated and created correctly, and then that it is being proactively reviewed, and it takes a long time and a lot of effort to get to that state.
yeah. I can imagine. And from your work with MSPs, what kind of are some of maybe the financial, red flags that tend to emerge when working with maybe MSP owners, especially what tends to emerge with, due diligence and all of those things.
Yeah, and a great topic there in terms of due diligence, assuming that they've reached a
Mm,
point where they're involved in an exit event, and the acquirer is quite rightly looking at their numbers, not just today but historically, in order to
mm,
prove trends and performance, and therefore extrapolate what's likely to happen
mm.
in the future. And one of the one of the key issues for most MSPs would find at that stage is if they've not been producing accurate management accounts for a number of years, it will be really difficult to respond to buyer inquiries and have any efficiency and accuracy in their responses as well. Because if you try and reconstitute the data based on 2-year-old information, it's probably going to be wrong. It's going to take you a long time. If you've been producing monthly management accounts for a number of years, and at the time you've been checking their accuracy and making adjustments where you need to, then they're pretty good, pretty solid. And a buyer will look at that and they'll say, well, if you don't have confidence in the numbers, why should I?
Yeah,
And often it may not even just be a discount. It might be we can't proceed because we can't rely on the information. And time kills a deal is one of the
yeah.
most popular phrases you'll hear in M&A. And yeah, it's absolutely right. If you can respond to queries quickly and efficiently, then you're going to give the buyer confidence, and it's going to proceed at pace and more likely to get to completion. So yeah, having solid information going back historically is a key red flag. The second red flag, which I must put in here, when we talk about management accounts, we talk about making adjustments, and one of the key adjustments is what role does the owner of the business play, and what would their remuneration be if they were employed? Because
Right.
most small business owners will be paid by dividend, and that doesn't go through the P&L in the same way that salaries of employed people do.
Mhm.
So you might look at your net profit at the end of a month and say, brilliant, we're making £10,000. But you're not, because you should have been paid £11,000 a month for the role or roles that
Yeah.
you're carrying out. So actually, you've lost £1,000 a month.
Right.
So it can be that sort of swing from woohoo to oh.
Yeah, it's not taking it like at face value, then I guess, isn't it? It's going a little bit deeper. And I feel like with my next question, we might have some sort of crossover with the last one, but I'll ask it anyway, just to go a bit more in depth. So, where are you seeing kind of MSPs most commonly leaving money on the table today, particularly in areas such as, with pricing models and contract structures and gross margin management?
Yeah, and I guess absolutely overlaps with the previous point,
Mhm.
because it's what you can do about it. So
Yeah.
let's say, for example, we are in an adjusted minus £1,000 position,
Mm.
and probably there are two levers that you can pull. You can either reduce your cost or you can increase your revenue.
Right.
And one of the most common issues that the MSP market generally deals with is the race to the bottom in terms of price. So uh, the right answer is almost always you should be selling at a higher price, but
Mm.
you're less likely to have the inclination, motivation, or indeed confidence to do that
Yeah.
if you look at a financial statement that says you're making £10,000 a month. If you're losing £1,000 a month, all right, now I feel confident to go to my client
Mm.
and find a way to manage the price up, assuming, of course, that everyone's really busy and there's no other cuts that can be made to adjust the cost. And it could be a very true situation if you're selling at just too low a price. So yeah, pricing is absolutely key. And again, it feeds into that M&A valuation future topic, as well as today, whether you're making enough money.
Yeah, and what kind of stage of this should MSP owners realistically start to begin thinking about like exit readiness and all of those things? And how are kind of increasing levels of M&A and private equity activity shaping what kind of good looks like financially?
The right answer, of course, is they should have started from day one in
Mm.
business. But the next best answer is today or tomorrow,
Soon as
and
possible.
as soon as possible. And if you going back to the previous point of having that sort of trailing history of management accounts, which means that not only do you have uh, the history reference points, because you've been looking at it at the time, you've been able to do something about it. So if you even quarterly management accounts could actually mean that you're already 4 months away from the point that you could have taken action if in that first month you realized that you were making a loss,
Right.
or not making as much money as
Mm.
you thought or wanted to. So you really should be starting from a position of accuracy, timeliness, because that's then a habit that's formed and will carry on. And yeah, if you start off selling at too low a price and therefore not making enough money,
Mm.
it's going to be really hard to reverse that later on. Whereas if you
Yeah.
start off selling at a price that allows you to properly resource and cost the service delivery and make a suitable healthy margin,
Mm.
then even if you're doing the delivery yourself from day one, that just means you're going to make even more money now.
Right.
And if you're not taking all the money out of the business, then that enables you to start to build a little savings pot, a war chest to fund future peaks and troughs in profitability and ultimately cash flow. So
Mm.
yeah, really, really, really important. And
Mm.
the the other point that you mentioned about private equity, well, that is fundamentally bearing down a level of professionalism on the whole market.
Right.
The best acquisition targets have already been acquired, and the next batch of uh, oven-ready acquisition targets are currently in the oven and baking away. And over here, this side of the kitchen, we're just making up our mix for our new MSPs that will be sold in 5, 10, 15
Yeah.
years time. So it's a constant production line, and so long as private equity are able to continue to invest and realize the returns that they expect, which means they've got to buy at the right price. Those businesses have got to perform. Otherwise, if the private equity don't see the return, they're going to stop buying businesses, or they're going to make it even harder to qualify. And so yeah, the industry itself needs to rise up to meet um, the professional returns that the private equity investors and then everyone else in that ecosystem will need to be delivering.
Yeah, and that leads us really, really nicely into my final question, which is sort of looking into the future. What do you think will define a kind of sellable MSP in the next few years, and how should owners be preparing today to kind of remain competitive in the increasingly, changing market?
If if a business at any point is delivering a good level of performance, profitability, growth, um, low attrition of staff and clients, that business will inherently have a higher, more reliable value and attractiveness to be bought in the future. Whether the mix of services provided might change, and undoubtedly will over the coming years as increasing automation and AI is adopted both by MSPs themselves and
Yeah.
MSP clients. If we assume that there's still going to be people involved at some level,
Mhm. Yeah.
then realistically, a lot of the current principles of designing and curating the MSP business should remain the same,
Yeah.
albeit with a slightly different mix.
Mm.
I don't think that the low priced providers will the market will adjust to meet them. I still think
Mm.
pricing generally needs to go up. The
Yeah.
value needs to be conveyed to the end clients in order to support that price increase, and the whole machine needs to keep spinning and growing in order to meet its best possible outcome. So yeah, I actually think, although we're in a period of great change and flux, we have always been, if you look back over every
Yeah.
decade of the IT industry, and I've been involved since the mid-90s, and
Mm.
a lot's changed, but a lot hasn't changed as well. And I think
Right.
that will persist as well,
Mm.
especially in the SME end of the market, which always is a trailing arm to the leading edge corporates. So SMEs will take a lot longer to move into this brave new world that maybe
Yeah.
we're about to enter.
Yeah. I wish I could just have a look forwards and just see it all, see what's going to happen. So it's very, very interesting. But no, thank you so much for your time today with the interview, and thank you for your time.